What is going on, traders? In this video we are going to talk about how to find high probability setups. But before we do that, the first thing we need to do, we need to analyze the current market structure. We need to understand what the current bias is before we start trading. Today started with a little bit of a sell-off, but prices quickly pushed above the EMA and started rallying up higher. So when I see prices pushing above the EMA and prices are making higher highs and higher lows, I'm expecting an uptrend. So what I want to do, I want to find my trend lines, because trend lines is where the magic happens, and that is the key entry point. Plus, I also want to know where the break of a trend line is going to be, so I can expect a retest of a new extreme according to trend line rules. And I'm going to give you guys a little bit tip here. Most of the time, most traders are finding their trend lines off the lows in an uptrend, but you can find a trend line much quicker if you look at it from the opposite side. If you take a look at these highs, how they're making higher highs, each high is higher than the previous one in a geometrical pattern, you can find nice fitting trend line off the top and just copy it, put it to the other side, and you can find this nice channel working higher. And now let's talk about what the high probability setup is. Well, high probability setup is basically two-legged move at the key entry point. And the key entry point is a trend line, support or resistance line, or exponential moving average. And here we have a first example of a high probability setup. This is the new high. We have this trend line working lower, which we need to draw the short-term trend lines so that we know we are on the right side of the market, because the break any new extreme does not only apply to bigger patterns, but as well to the shorter-term ones. So we have a trend line working lower. We have a first entry long. This is the first trigger higher above the bar high, and it instantly failed. This is why we don't trade first entries. They are not high probability setups, even with the trend is up. Pullback, second entry long. So we have a first leg, pullback, second leg at the key entry point and at the EMA. Two key entry points, second entry long. But this is too early, so I'm not going to mark it because most of us wouldn't be trading at this point on. But just you guys to see what the high probability setup looks like. Second entry long off the key entry point. And market continue working higher. And here we have a repeat pattern. And when it comes to repeat patterns, guys, once you see something happen once something happens one in the market, it's most likely going to do the same thing again. And here we have the exact same thing. We have a first entry long, first leg down, second leg down. This one is not measured, but that's okay. It's very close to being measured. The legs don't have to be measured. This is the new high, first entry long, pullback, second entry long. Plus, in both cases, we have a break and a new low. We have a break and a new low. We are in an uptrend, and prices just broke this trend line, and we closed above the EMA. But we have a break of a trend line, but we're not going to counter trend yet, because after trend line will break, prices will attempt to make a new extreme. That's the rule of trend lines, and we need to follow this. So we're expecting a new high, and we're coming with the trend, high probability setup. And then prices pushed higher and created a higher low setup. This would be a very tempting trade because EMA is holding prices, but at this point on, you're getting very dangerously close to this resistance, to this top right here, and you don't want to be going long at the very high of the day. That's not high probability setup, and neither one of those setups are high probability. You just have to let these setups go. They're not at the key entry point. Bunch of first entries, let them go. They're going to be much better setups later on in the day. And we have a break and a new high. And notice how this trend is fairly steep. This is a strong, steep move up, and steep trends don't last too long. This is the same similar situation I showed you guys a few days ago. Notice how this trend was very steep and it reversed on the dime. It looks like a pyramid. First move, second move. The same thing, very similar today. First move, second move. The steep trends up at the very beginning of the day, a lot of times they will get reversed fairly quickly. And here we have a trap. And I want to talk about trap here specifically, why this is a trap. This right here is a second entry long, because we have a new high right here. We have a first entry long, pullback, second entry long. We also have a break and a new low of the very shortened trend line. So this, a lot of people, and we're at the EMA, so a lot of people will be buying this second entry long. This is why this is a trap, because it will sucker in a lot of beginner traders who are not paying attention that we already have a break and a new high and the uptrend played out. Because as I mentioned, what you don't want to do, you don't want to be constantly redrawing the trend lines and making them larger and larger like this. No, remember, the first trend line you would see the oldest one is the one that is valid. This is the one you want to stick to, because you could be doing this for the rest of the day, something like this, and this is not the way you draw the trend lines. So this is a first entry long, second entry long, and this is a nice bearish bar, and we close below EMA. This is a trap. Once I mentioned second entry long at the EMA, but the market context is not in the favor of going long because they have a new high. So this would be a great trap to take, and we don't want to go short below this bullish bar, because remember, we are trying to sell now. So we need to wait for prices to trigger below this bearish bar. Same thing when we're buying the second entry long, we need to wait for prices to take one tick above this bullish bar. We cannot enter in the middle of the bar just because we are expecting or we are feeling the trade. Sometimes the trade will just go lower and you will not get the entry, but you will get filled and you will be wrong. You always have to wait for the one tick trigger below the signal bar. And prices continue making lower highs, lower lows. Same thing right here. You're expecting a downtrend, you're expecting to find a trend line. And once again, you can find a very nice fitting trend line off the lows. You find it off the lows, you put it right here. But when we are looking, when we are looking at the for two-legged moves right here, something like this, the same thing we are looking for in a downtrend. So we have a first entry long, but it failed. There's no second entry. Once again, we have a first entry short. We have a first entry short here once again. Oh, and we have a pullback, and we have a second leg up. Plus, we have the shortened trend line, we have a break, and a new high. And lo and behold, where do we find ourselves? At the key entry point, at the EMA. Second entry short, break and a new high, two-legged pullback. With the trend, this is the break of this channel. So what's going to happen? We're most likely going to continue making lower highs to new extreme, to the new low, according to price action rules. Nothing is 100%, nothing is written in the stone, but most often than not, you can trust these rules and they will make you consistent money. So everything lines up perfectly and market keeps selling off lower and lower. Oh, and by the way, there's something I want to mention. A trader, something a little bit different. A trader mentioned that I'm starting to get a little bit more views than Mac. So I would like to ask you guys, please go and watch Mac's videos as well. Mac is the reason why I became profitable and why I made it. And he is much more experienced. He's much more skilled. I understand that the videos are a little bit dry, but he really knows what he's talking about. Same as Al Brooks. Al Brooks and Mac, I studied these guys to the T. They know what they're talking about. Make sure to watch their videos because they have a lot of knowledge. And also make sure to check out Bye Money's channel and to check out Sol's if he's going to upload in the future, because you really want to gather as much of a content as you can to make the learning process quicker, because you want to really study the one strategy and you really want to study as much as you can from different views. So this will really speed up the process. And this is not paid promotion. I don't think Mac even knows my channel exists. So I just want to recommend it because Mac is a great guy. So make sure to watch the videos. And if you really like this type of trading, because to be honest with you guys, this type of trading really works, and there are successful students that we actually make money doing this. We trade for a living, not like the rest of other crap that is on YouTube, the fake Forex gurus with their rented Ferraris, Lamborghinis, charging $200 a month or $500 a month for signal service. So it's crazy out there. So if you like this strategy, gather as much content as you can pretty much to see the different point of views, because this will really speed up the process. It's not like 8 years ago when I started where you can only follow a few traders. Now you get plenty of traders and you really want to pick everybody's brain as much as you can. So let's get back where we ended. We have a break and a new low right here, and I was fairly surprised that we continue making a second leg down, because this was a very steep move and followed by another steep move down, two-legged move down. And just as I keep talking about, notice where prices found support at the low of the day. This is why I always, before I start trading live, you guys see it in my live sessions, I always analyze the lows for the day and the high for the day. And I do it because most often than not, they will come into play. And it happened right here. Look where people started buying. And some traders even have strategy where they put blindly limit orders at these important key levels and they will take the trade, which is, I don't recommend this because this is, not that many people can have a stomach for this, but some traders utilize this. So always find the highs and the lows for the day. They can come into play more often than not. And I marked this trade because this is where I took a loser. I bought the market right here, and I'm gonna show you guys what I was thinking. Let me make it a little bit bigger. Since we found support right here, the key level is looking strong. What I was treating this as a reversal pattern. First entry short, pullback. Second entry short, nice bullish reversal bar. We closed above the EMA. It seemed good, and it instantly reversed on me, and it trapped me. But what I missed is we already have a trend line working higher, break, and a new high. So the uptrend played out, and we already have 2 legs up. Plus, if you take a look, if you take a little bit step back, this downtrend, look how strong this downtrend was. This is 30-point move downtrend. This is very strong, and it's very unlikely we're gonna just sharply reverse, off just on a dime like that. But the main key factor here is that we already have a 2-legged move up, and this is a second entry. We have a break and a new high, because the reversal pattern a lot of times happens just like I was looking at here. We are inside of the trend line, and there are no 2 clear legs up. You guys can see we have a new low right here. First entry short, second entry short, but this is still part of one single leg working higher. This right here is a clear break, clear new high, and a 2 clear moves up. So this was the clue that I missed. I still think it was worth taking the risk. They just got me. They got me. And I think this is a great trap. This is a second entry short and a lower high setup. So I didn't take this trade because I was still inside of this. It is impossible to reverse the gear so quickly. This is the trade that I took, and I recovered, because next time I was trading this was new high, first entry long, pullback, second entry long. And I thought we were going to continue making a few moves down, which we eventually did, but we ended up going to trading range. And now I'm just going to delete this for a moment, because we have a break and a new low, and after that prices will either reverse straight up or go into correction. So what we have to do when we see prices going up and down there, look how prices are swinging up and down through the EMA. EMA is getting into the middle of those bars. This indicates, you guessed it, trading range. So I'm going to have to switch the rules now, and I'm going to have to trade the range rules. And you can find the trading range just off this pure price action. This is a downtrend, this is uptrend, this is a consolidation. This is clearly visible that market is making this wedge, and this is looking very choppy. So you can find the highs and find the lows approximately somewhere around here. You can tweak it later on a little bit. It ended up being somewhere around here. Now, once prices broke the trading range, oh, I actually forgot to mark this. Once prices broke the trading range, how you trade the trading range? You buy the lows, you sell the highs, but more importantly, you fade the breakout. Fading the breakout is trading the breakout in the opposite direction of the breakout, meaning we broke higher, and most breakouts of trading ranges will just fail, at least temporarily. They may be a breakout pullback pattern and then continue working higher. That can happen. This is where you want to buy if you're the breakout trader, but you would never want to buy just pure breakout. The amount of time the breakout will just go and not look back is so slim to none. The chances are slim to none that it's not worth taking a trade. So you have a failed break higher, prices push lower, retested the market structure, and you have a lower high setup. First entry long, lower high setup off the trading range. And I want to show you guys repeat pattern right here. Prices broke the trading range, pushed back lower, retested the market structure, and you have a nice bearish bar, lower high setup. I recommend to a lot of beginners taking these lower high setups, because not everybody can stomach taking the trade at the very top or at the very low. People are scared to pull the trigger. This is much more beginner friendly. So if you are scared to just fade the breakout instantly, wait for the lower high setups. You guys can see this is the exact pattern, and it works like clockwork. And when prices are working in the trading range, what you want to do is you want to draw the short-term trend lines to see where the breaks are going to be. Prices push lower, you have a first entry short, second entry short, extremely tempting to take. You're waiting for a new low of this downtrend, you're at the EMA, but this is a trading range, and we don't trade middle of the trading range. And this is very tight. We're very close to the low. So you really just want to wait for the failed breakouts. You have a new low, so this downtrend played out, and you want to fade the breakout. After that, price is starting to consolidate really a lot. We couldn't even make it to this higher resistance, and we just kept chopping lower. So I really think the best thing to do here is either call it a quits, because you were supposed to find a lot of setups on your way down here, or just sit on your hands and, you know, watch the market go and maybe sim trade it. And the last trade I marked was this, because market pushed higher. You don't want to sell below this bullish bar. The next bar was the doji bar, so you may consider selling this. But it kind of looked like market keeps maybe reversing, because you already have a one failed breakout right here, one failed breakout right here. Eventually one breakout will prevail. It is according to our rules I'm going to mark it, because it is a nice bearish bar. But the lower high setup confirmed that the entry long is failing, and it's a nice bearish bar which you want to take the lower high. And that's it for today. This was the bigger picture. And trading trends is really easy. Two-legged moves at the EMA, at the trend line, two-legged move right here, second entry. This was the trap, but hopefully you guys can see why this is a trap at the very high of the move. After we have a break in a new high, this is how a trap looks like. I'm gonna wrap it up. So remember guys, follow the rules, trust the process, and keep studying your charts. Take care, everybody.